Now, Southeast Asia is drawing more attention from global investors, according to a study by the Milken Institute. It points to growth in markets like Malaysia, Vietnam, and Indonesia, even amid fresh risks from energy disruptions in the Middle East. CNA's Olivia Marzuki finds out more.
Southeast Asia is looking increasingly attractive to investors. That's according to the Milken Institute's Global Opportunity Index. It measures factors like economic fundamentals, financial services, and the broader business environment.
The 6 growth markets in Southeast Asia that we focused on, Cambodia, Indonesia, Laos, Malaysia, the Philippines, and Vietnam, attracted over 8% of total global capital inflows to emerging and developing economies over the time frame that we looked at. And the region and most of the countries within the broader Southeast Asia really finished 2025 on a strong note in terms of FDI.
Among the 6 fast-growing economies in the region, Malaysia comes out on top. It ranks 23rd globally in the index, anchored by strong institutions and supportive growth conditions. Vietnam also stood out. It ranks 2nd in the region and 39th globally. It remains one of Southeast Asia's strongest growth stories. Now, Indonesia, the region's largest economy, is also moving up the ladder. Its financial services jump significantly, led by a wider expansion in financial access.
Stable growth over a long period of time has been attractive to investors. Relatively low government debt and unemployment in many countries has also created an environment in which investors see the possibility of long-term sustained growth.
Still, not every market is performing equally. The Philippines scores strongly on economic performance, but governance and regulatory gaps remain. Cambodia and Laos, meanwhile, continue to lag because of deeper structural and institutional weaknesses. Now, there's also a broader shift underway. Southeast Asia has taken a bigger share of capital inflows into developing economies, while China's shares have fallen sharply. Milken says ASEAN economies have benefited as investors diversify away from China.
We've seen the shift of flows out of China as investors have looked to diversify more broadly. Southeast Asia has absolutely benefited from that. As investors continue to see diversification as a key way to enhance resilience across both their portfolios and supply chains, the region has taken on even greater importance to shift away from some sort of potentially volatile regions.
But there is a warning sign. Southeast Asia may be gaining investor interest, but it remains vulnerable to outside shocks. Milken points to the conflict in the Middle East as a risk to shipping and energy markets, a major concern for economies heavily dependent on trade and imported energy.
Challenges around gasoline or natural gas are quite significant for the region, and that has a number of knock-on effects on the supply chain and manufacturing side. Is the impact on cargo volumes shipping out of Southeast Asia and shipping rates more generally. They can be both lagging and leading indicators of underlying economic health in specific sectors. And that's something that was not captured in the report at the time, but we are looking at moving forward.
Milken says the disruption has not changed its overall view of the region yet. Southeast Asia is becoming harder for investors to ignore, but in a more volatile world, the real test will be whether the region can turn opportunity into lasting resilience.